Hi, this is Matt Carbray of Ridgeline Financial Partners. This is Matt on Money. In today's episode, what we're going to talk about is the Russia and Ukraine conflict and just how investors need to deal with that, what they need to understand about that. That'll be first and foremost. We'll then transition a little bit to talk about tax season. Here we are, it's March 1st today as we film this, and people are probably getting all of their documents together. Maybe some of you more fortunate have started the process or have already filed your income taxes. We'll talk about some considerations prior to filing your tax. And lastly, we'll talk about, in light of renewed volatility, which we haven't seen in quite some time, what are some things that investors should be thinking about? What are some of the strategies that may make sense? And we'll talk about basic investing 101. So Matt on Money, March 2022. Okay, so as it pertains to Russia and Ukraine, let me first off say that all of us here in our office are certainly thinking about those that are in Ukraine, those with loved ones in Ukraine, and this certainly is not intended to undermine the importance of thinking about humanity at a time like this. But what my responsibility is to help investors to understand what is it that you do in times of crisis like this. And this is certainly something that, although it's thousands of miles away from us domestically, because we are such a global economy and we are so very much so interconnected as trade partners, that you are feeling the reverberations throughout the United States, even though it's not happening here on our continent. So my feeling about Russia and Ukraine is that it is certainly scary. And it's scary as an investor. For those that are considering putting new money to work for a short-term or a long-term goal, it's a difficult time to want to be putting that money directly into the markets. So what are some of the things that you could be thinking about? Well, possibly the strategy of dollar cost averaging, or dividing that investment amount over a certain period of time so that you can spread out those investments. Not knowing what the market is going to look like over the next 6 or 12 months, perhaps it may make sense for you to think about a more elongated investment time horizon to get new money to work. That's first and foremost. But as we think about what's going on over in Ukraine and Russia, and you think about just the resources that Ukraine has as a country, a lot of this ultimately comes back to a land grab and also a natural resources grab, and I think that's a lot of what's motivating Russia. But what we've seen as of recently is energy prices at historic highs. We haven't seen energy prices at levels like this in quite some time. So we're all, as consumers, feeling a little bit of pain at the pump. And in the Northeast, when we're in a very cold season, we're also experiencing abnormally higher heating bills that go along with that. So as investors, we have to remember that if the intention of the investment is that it's more longer term in nature, that we can't lose sight of that fact, that we can't get caught up in the moment and feel like that we need to take some sort of action just for the sake of taking some sort of action. I all too often have people say, Matt, well, what should I do? And should I do something? I feel like I've got to do something. And that's a natural inhibition, but it's not the right time to doing anything out of character. If you still have that long-term time horizon, let's stick to it. If anything, one of the strategies that may make some sense is just to revisit how you feel about risk. When markets are going straight upward, most people feel very comfortable about risk, but maybe going through an exercise to just confirm that your risk tolerance is in alignment with how your portfolio is invested. And one last idea that I'll throw out there, which is something that is not done often enough by individual investors, is the idea of rebalancing. If you have a portfolio a couple of years ago that was 60% stock, 40% bond, the likelihood is that that has skewed, and you may have a portfolio that's 65 or 67% stock with a reduction in what you have in bonds, with bonds providing more stability than equities in times like this. So those are some of the ideas that I think may make sense as a way to react to what's going on in Russia and Ukraine and to be a little bit proactive. Okay, so we all have to deal with tax season to varying degrees. and we have the deadline of April 15th, and I believe it's been pushed out a couple of days because of it falling on a weekend or a holiday. So we may have a couple of more days beyond our traditional filing deadline. But as we start to prepare our income taxes, what most people realize is that, well, the year's over and there's not much that I can do to improve my tax situation. Well, that may be true in some respects, but in others it may not be. So timely contributions to retirement accounts, such as individual retirement accounts, also follow the tax filing deadline or whenever you happen to file. And contributions that are made in 2022 may be able to be used to offset 2021 taxable income. For those of you that are self-employed, there may be the opportunity to use certain types of employer or self-employed type retirement plans to further reduce your taxable income. So the year of 2021 certainly is past us, but we still do have some opportunities in 2022. If you find that some of the opportunities that are available to you in 2022 may not be allowable retroactive to 2021, well, we've got a good 2 months in front of us to start to think about some of the things that have more of a year-end tax filing deadline. Things such as contributing to a health savings account, contributing to your 401k through your employer, flexible spending and dependent care accounts. Those are all tools that may be available to you through your employer that do require you to take advantage of them within the calendar year to use for that particular year. So as good of a time as any to take some inventory. A lot of you have heard me say that in the past, and I'll continue to say that in the future. It certainly is a trying time. We are certainly sensitive and compassionate to those that are in Ukraine and those that do have family and friends over there. We hope everything works out as good as it may. And we, as investors and looking on behalf of our clients and investors, continue to maintain a long-term time horizon if in fact that is the case. And if anything, with periods like this that we've encountered in the past, for those investors that have been patient, for those investors that have accumulated money that's been sitting on the sidelines, this could be a potential opportunity to put new money to work, albeit probably over the course of time in some sort of a strategy where that money gets put in by way of dollar cost averaging. So this has been Matt on Money, March of 2022. We hope you all are well. We look forward to seeing you next month. Thanks.